Okay, so guys, we are starting with chapter number 10 in your study mat. Okay, chapter 10 is on consolidation. So the chapter head given in your study mat is you preparing a consolidated financial statement. So this chapter is based on accounting standard number 21. Now, what is the meaning of consolidated financial statement? Nothing but you'll be asked to prepare a balance sheet of the holding company along with its subsidiary, right?
Yes, sir.
So you must have come across this term holding company and subsidiary company in your Companies Act, right?
Yes,
In
sir.
company law, you study about holding company and subsidiary company. So let us say, for example, let us say I represent A Limited, and you guys represent the shareholders of B Limited. Let us assume that there are 10,000 shares. There are 10,000 equity shares in your company. And I buy around 9,000 shares in your company. So what is a 9,000 out of 10,000 shares in your company? I hold, that is A company holds 9,000 shares. So what is a 9,000 upon 10,000? It is a 90% holding. That means I'll call 90% of your company is held by me, the holding company. I am the holding. And you become my subsidiary company. Your company, B Limited, will be a subsidiary company, and I am the holding company, A Limited. In my books, what happens, you'll find on my balance sheet, you'll find investment in B Limited, 9,000 shares, bought at XXX, whatever amount, right?
Yes, sir.
So what I do is a shareholding pattern. The shareholding pattern of your company will be out of 10,000 shares, 9,000 shares are held by the holding A Limited. So 9,000 upon 10,000 is 90% holding. That means the balance 1,000 shares are held by you people who are the minority shareholders of the subsidiary company. Remember, there is a subsidiary company out there called B Limited. And you guys are holding 1,000 shares in that company, 10% holding, 1,000 upon 10,000 is 10%. So whatever profit that is made by B Limited, the subsidiary company, will be enjoyed by A Limited 90%. And then you people, minority shareholders, how much? 10%.
10%.
You shouldn't say A Limited and B. It is A and minority. A is a holding company, and then you guys are known as a minority shareholders. Okay, now how to go about preparing a consolidated balance sheet? You got to follow these steps. Just put all the steps on the screen,
Yes, sir.
Shruti. So these are the steps you're going to follow. There are 6 steps before you can prepare a balance sheet of the holding company, or rather the group, right? The holding company and its subsidiary, also known as a consolidated balance sheet. There are 6 steps involved. So refer to step number 1. You have to get the shareholding pattern. For example, 9,000 shares upon 10,000 shares, 90%. And 1,000 shares upon 10,000 shares is 10%. So you got to get the shareholding pattern. And also you have to specify the date on which I bought 9,000 shares in your company. Understood?
Yes, sir.
I got to get the shareholding pattern and also the DOA, the date of acquisition, right? That's the first step.
Yes, sir.
And step number 2, I am supposed to analyze the reserves and the surplus of B Limited. In our example, B is a subsidiary company. I got to analyze the reserves and surplus of B Limited. And then split that between the holding company and the minority shareholders in the ratio 9:1 in our example, 90% and 10%. Is that fine?
Yes,
or
sir.
9:1. So analyze the reserves and surplus of the subsidiary company is step number 2. Step number 3, I need this number for the balance sheet. I got to find out what is the amount of minority interest on the balance sheet date at the year end. So that is step number 3, computation of minority interest. And then the fourth step will be, it is something we calculate on acquisition date. Now, when I buy shares in your company, I got to calculate something called goodwill or capital reserve. Now, whether I pay something more than your company is worth or less than. Suppose your company is worth 10 lakh rupees, but I paid 12 lakh. I paid 2 lakh extra. What is that? Goodwill. Okay. If I pay something less, the difference what? Capital reserve. And this step is also known as cost of control, right?
Yes, sir.
People say cost of control or capital reserve. Nothing but goodwill or capital reserve. That is step number 4.
Yes, sir.
But remember, step number 4 is something which is calculated on acquisition date. And then step number 5, what happens at the year end? At the year end, what you should do, any intercompany owings and also any unrealized profit on any goods sold to one another, any profit which is not earned by the group should be eliminated and don't bother. So what is the meaning of intercompany owings? Example, year end. The holding company will say, I have to get 10,000 from the subsidiary company. For me, it's what? A debtor. For you, it's a creditor for B Limited. So it can be cancelled.
Yes.
No point in showing the same 10,000 rupees as a creditor and a debtor.
Yes.
So that is elimination of intercompany owings, or we say intra-group balances. It's all within the same group, right?
Yes, sir.
And elimination of any unrealized profit. And then the last step, but before you can make the balance sheet, will be you got to find the reserves and surplus for the balance sheet, also known as a consolidated reserves and surplus, or we say group reserves and surplus, to be shown in your balance sheet. And the last step is a balance sheet itself, right?
Yes, sir.
Where you got to make a CBS. What is CBS? Consolidated balance sheet. These are the 7 steps you got to follow. And that is all with the chapter as such. Okay. So what is the complication in this chapter? What happens on acquisition date? The holding company may revalue the assets of the subsidiary company, right?
Yes.
Now, how do you account for such revaluations? Or maybe there is a bonus issue made by the subsidiary. How do you account for that bonus issue? Suppose there is any dividend paid by the subsidiary company. How do you account for such dividends? All these are the complications in this chapter. But for that, but for these 3 major adjustments, it's a very simple chapter. You got to follow the same 6 steps plus what? The balance sheet. Is that fine?
Yes, sir.
Of course, there is one example where you're going to make a CPL. What is CPL? Consolidated profit and loss. Is that fine?
Yes, sir.
Anyway, so guys, you just pause the recording and jot down these 7 steps in your notebook.
Yes, sir.
Okay, so guys, we are starting with illustration number 10 from your study mat. And remember here, I'm not going deep into what is control, more than 1/2 of the voting shares. All those you study in your company law, right?
Yes, sir.
So I'm not getting into that. But remember, in this chapter, the minute one company holds more than 50% of the equity share capital of the other company, the company that's holding becomes a holding of the parent company. And the company which is controlled by the holding or by the parent is called a subsidiary company. Is that fine?
Yes, sir.
Now let us go ahead and take on this example, illustration number 10 from your study mat. Yes.
Yes, sir. Illustration 10. From the following balance sheet of H Limited and its subsidiary S Limited, draw up at 31st March 20X1. Prepare a consolidated balance sheet as at that date, having regard to the following.
Okay, people should underline first. They're given the balance sheet as on 31st March 20X1. Remember that. It is given that the balance sheets have been given for two companies, a holding and a subsidiary company, as on 31st March 20x1. Next.
Number 1. Reserves in profit and loss account of S Limited stood at rupees 25,000 and rupees 15,000 respectively on the date of acquisition.
You saw that is reserves and surplus. Reserves how much? 25,000 balance. And how much in P&L?
15,000.
15,000. As on?
The date of acquisition.
Date of acquisition. Next.
Of its 80% shares by H Limited as on 1st April 20x0.
You know what is the meaning? There goes so much information. I bought shares in your company. Let's assume throughout the chapter, you guys are the shareholders of the subsidiary or the minority shareholders of the subsidiary company. Okay. So I bought shares in your company on
1st April.
on 1/4 on 1st April 20x. That means what? At the
Start of the
20x0 start of the year.
Yes.
That means all the 12 months in the current year will fall under something called a post-acquisition period.
Yes, sir.
In step number 2, if you recall, you have taken down the step. Analyzing the reserves and surplus of subsidiary company into what? Pre and post-acquisition. So please remember, I bought shares in your company on 1st April 20x0, right?
Yes, sir.
And I bought 80% of your shares. That means right now you guys are holding only 20% in the company. So I bought 80% of your shares on 1420x0 at the start of the year. That means all the 12 months in the current year will be post-acquisition period.
Yes.
And what is the balance in your company's reserves? 25,000
and 15,000.
and balance in profit and loss account. Or if you want, you can call retained earnings. 15,000 rupees on 1420x0. Next.
Number 2. Machinery, book value rupees 1 lakh and furniture, book value rupees 20,000 of
Okay.
S Limited were revalued at rupees 1,50,000 and rupees 15,000 respectively on 1st April 20x0.
You saw that your company had a machine worth rupees 1 lakh on 14x0. That was revalued at 1,50,000. And you had a furniture worth rupees 20,000. It has been revalued at 15,000 rupees. That too, these revaluations are made by the holding company when they bought shares in your company on 1420x0. Always, normally what happens, revaluations are made on acquisition date. Why? So that I can arrive at the price I should pay for your shares for that purpose. Next.
For the purpose of fixing the price of its shares.
It's given also.
Yes.
Okay. Next.
Rates of depreciation computed on the basis of useful lives. Machinery 10%, furniture 15%.
Very good. Now just see if you see the balance sheet of the subsidiary company, you'll find machine. Later you can show that.
Yes.
1 lakh is a machine in your books. What is 10%? 10,000 rupees off. What is the closing balance? 90,000.
90,000.
And furniture, what is the amount? 20,000.
Yes.
What is the rate?
15%.
3,000 off. Closing balance will be 17,000.
Yes.
That means in case your company did not bother to revalue the asset in your books, the machine will be appearing at 90,000 rupees and furniture appearing at 17,000. Is that fine?
Yes.
Next.
Balance sheet of H Limited and S Limited as of 31st March 20x1.
Now they given the balance sheet as on 31/3x1 at the year end. Yes, for now read only selective items for me, okay?
Yes, sir.
Now tell me, what is a share capital given for the subsidiary company, S Limited?
Rupees 1 lakh.
It's A and B or H and S?
H and S.
Okay, very good. Now, what is equity share capital given for S Limited?
Rupees 1 lakh.
1 lakh rupees given. Okay. And is there a note for that?
Yes.
We'll read that later.
Yes, sir.
And what is the reserves and surplus of S Limited?
1 lakh.
1 lakh rupees. And there is a note for that.
Yes.
Okay, good. And then on the asset side, tell me, have they given property, plant and equipment?
Yes, sir.
And how much is given under S Limited?
1,07,000.
1,07,000. Is there a note for that?
Yes.
Note number?
3.
Okay, let us go through note number 1, 2, and 3.
Yes, sir.
Tell me note number 1, share capital, what is given for S Limited?
Yes, sir. Note number 1, share capital.
Is it on the screen?
Yes, sir.
Okay, good.
1 lakh equity shares of rupees 100 each fully paid up. Under S Limited, rupees 1 lakh.
It is 1,000 shares of rupees 100 each, rupees 1 lakh. Out of 1,000 shares appearing on your balance sheet as on 31/3/X1, how many shares I bought a year ago? 80%. That means I'm holding 800 shares. I am holding 800 shares out of 1,000 shares. That means how much you guys are holding now? Only 200. So you guys are the minority shareholders of the subsidiary company.
Yes.
Is that fine?
Yes, sir.
80%, 20%. And tell me reserves and surplus, what is given?
Reserves and surplus. General reserve, 75,000.
Wait, 75,000 as on 31/3/X1 balance sheet, right?
Yes, sir.
But what was the balance and reserve at the start? Remember, it was 25,000 given. That means how 25 becomes 75,000? That means 50,000 should be the amount transferred to general reserve from the current year profits.
Yes.
The entry would have been profit and loss appropriation account debit to general reserve. Understood?
Yes, sir.
And what is the balance in P&L given?
25,000.
What was there at the start?
15,000.
I mean 10,000 is a profit made in the current year by the subsidiary company.
Yes.
Got it?
Yes, sir.
Next, go to the asset side.
Yes, sir. Property, plant and equipment. Machinery, 90,000.
Machine 90,000. That means what? You did not account for the revaluation. That is the meaning. So 1 lakh is a machine you had year ago. On that 10% is 10,000 off, balance 90,000. But sometimes remember in the examination, they may not specify the rate of
depreciation.
But you have to find out. 1 lakh is opening, closing is 90,000 means 10,000. Upon 1 lakh is 10% rate.
Yes.
And then what about the furniture?
17,000.
Is 17,000, nothing but 20,000 minus 3,000, right?
Yes.
That means you have not accounted for the revaluation increase or decrease in your books.
Yes, sir.
But which has to be accounted for the purpose of consolidation.
Yes, sir.
Then one more item you read from the balance sheet, Shruti.
Yes, sir.
Now, do you find the investment?
Yes, sir.
In my balance sheet, holding company
Yes,
balance sheet, how much?
Rupees 6 lakh.
What does 6 lakh represent? Have you got a note for that?
Yes, sir.
What is the note?
Note number 4. Other non-current investments. Non-current investments. Shares in S Limited. 800 shares at rupees 200 each. 1,60,000.
You saw that I bought 800 shares in your company at rupees 200 each. Face value 100, that doesn't matter. I bought 800 shares at rupees 200. How much? 1,60,000. Then
other investments 4,40,000.
Other investments of 4,40,000 in all 6 lakh rupees.
Yes, sir.
But remember that 1,60,000 is a relevant number for calculating goodwill or capital reserve. So remember in the examination also you can follow this pattern. That is, first see what is the share capital of the subsidiary company and check for the reserves and surplus of the subsidiary company. And then check for the assets of the non-current assets or say property, plant, equipment or subsidiary in case assets are revalued. And then also check investment appearing in the balance sheet of the holding company, right?
Yes, sir.
And the rest of the items are okay. The rest of the assets and liabilities are fine.
Yes, sir.
Yes, ma'am. Now that's it.
Yes, sir.
And you have been asked to make a
consolidated
balance sheet as at 31st March 20X1. So we have to sincerely follow those steps. Is that fine? Luckily, we don't have any intercompany owings.
Yes, sir.
Now let's go ahead with step number. Yes, ma. Read.
Yes, sir.
On the screen.
Yes, sir.
Yeah, step number 1.
Step number 1. Shareholding pattern and date of acquisition. H Limited. 800 shares upon 1,000 shares in 200. 80%.
You understood?
Yes, sir.
There are 1,000 shares in the subsidiary company. Of that, I am holding how many shares? 800 shares. 800, where is it given? Is there in the investment, 800 shares.
Yes.
Or it's given in the adjustment, 80% I bought. What is 80% of 1,000? 800.
800.
So 800 shares upon 1,000 shares into 100. And we inform the examiner something what is already given in the question. 80% holding, right?
Yes, sir.
And then comes minority interest. This is where people make a mistake. They write S Limited. No,
yes.
It is a minority interest.
Yes, sir.
Balance 200 shares upon
1,000 shares into 100, 20%.
That is a ratio.
Yes.
That means whatever profits are made by the subsidiary company, what? The holding company and the minority shareholders will share in the ratio 8:2 or 4:1.
1.
Or 80% belongs to me and 20% belongs to you people. When I say you people, what? Minority shareholders of the subsidiary company.
Yes, sir.
I am a majority shareholder in the subsidiary company.
Yes,
Okay.
sir.
That's the first step. And guys, I will march on. Okay, if the video, it will be continuous. I'll be going on. But you guys, people watching the video should actually pause the video at this point and then you take down first step. Okay.
Yes, sir.
So now I'll proceed with step number 2.
Date of acquisition.
In step number 1, one more line you write. What is that?
Date of acquisition.
Date of acquisition is 1420x0. And with that, you complete step number 1. And I proceed to step number 2. What is step number 2?
Analysis of reserves and surplus of subsidiary company.
Okay, guys, watching the video, please pause the recording and put down step number 1, including the date of acquisition in step number 1. Then come to step number 2. Is that fine?
Yes, sir.
So analysis of reserves and surplus of S Limited. In that, I'm going to analyze the reserve, general reserve, and a profit and loss account of the subsidiary company. Please remember, whenever there is a revaluation of assets, first you take up those revaluations. Why? The revaluation increase or decrease will impact your profit and loss account or post-acquisition because of depreciation adjustment. Is that fine?
Yes, sir.
Yes, ma'am. Step number 2, under that.
Point A.
Under that point A.
Revaluation of machinery. Point number 1. Book value as on 14x0, rupees 1 lakh.
Why is that? Because that is the date of revaluation. So I take 1 lakh rupees, right? Understood?
Yes.
So remember the first point under point A. Point A, I'm taking up revaluation of machinery. In that, the first point is always, I need the book value of the asset on the date of revaluation. Very important. So 1 lakh rupees already given in the question. Take it. Point number 2.
Revalued amount as on 14x0, 1,50,000.
Or you can say it's a fair value or revalued amount is 1,50,000. And point number 3.
Revaluation increase, rupees 50,000.
Remember, this 50,000 rupees increase will be straight away taken as a pre-acquisition
profit.
Why? Because it is happening on revaluation date and not post.
Yes, sir.
It is on acquisition date, right?
Yes, sir.
So therefore, it's a profit on acquisition. So it's a pre-acquisition profit. It's a profit increase, 50,000 rupees. Next.
Point 4. Depreciation on revalued amount at 10%. 1,50,000 into 10%, 15,000.
That means what? Had your company revalued, no, S Limited, then what? Then the depreciation should have been what? Should have been 10% of 1,50,000, 15,000.
Yes.
But how much a company charged? Only 10,000.
10,000.
So 1 lakh has come down to 90,000 because you did not account for the revaluation, right?
Yes, sir.
Please remember, point number 4 is the depreciation on the revalued amount for the post-acquisition period. For all the 12 months, why? Because I bought the asset, I bought your company on 1st. I bought shares in your company on 1/4, right?
Sir.
For all the 12 months, 15,000 rupees. Next.
Point number 5. Depreciation already charged by subsidiary limited in their books.
1 their books. 1 lakh into 10%, 10,000.
Yes, sir.
Or you can take 1 lakh minus 90,000, how much? 10,000. Either way.
Yes, sir.
And now tell me, you should have debited how much?
15,000.
You should have debited 15,000 to your P&L.
Yes, sir.
When I say your means, it was initially your company.
Yes.
Then I bought some 80% shares in your company. Initially, you were holding what? All the 1,000 shares.
Yes.
Then I bought 80% from you people, right?
Yes, sir.
So therefore, that's why I say your company, fine. And it is going to be over here, it is 15,000 should have been debited to P&L. But how much has been actually debited? Only 10. That means what I charge another?
5,000.
Debit another 10,000. Against what? Post acquisition profit, because this is for which period? After 1420x0, right?
Yes, sir.
Till the year end. So therefore, remember, you have to adjust for this 5,000 against a post revaluation or post acquisition. Both mean the same. Why?
Yes, sir.
I revalue the asset on acquisition date.
Yes, sir.
Yes, ma'am. Read the point. Sixth
Point number 6. Additional depreciation to be charged against post-acquisition profit. 15,000 minus 10,000 rupees 5,000.
You have to reduce a 5,000 from the profits made by subsidiary company in the post-acquisition period, right? Which is the current year. All the 12 months in the current year, right?
Yes, sir.
Always remember, in step number 1, when you write the date of acquisition, no, 1420x0. If you cross your mind, that means all the 12 months in the current year is what? Post-acquisition. Suppose you want to write 1st October, then what? Then 6 months pre and 6 months post.
Yes, sir.
Understood?
Yes, sir.
Next.
Point B. Revaluation of furniture. Point number 1. Book value as on 14x0, 20,000.
Again, guys, very important. Before you go to the second point in step number 2, what do? You can pause the recording and work out. Point A, finish it off.
Yes, sir.
Under step 2, point A, finish. Then take a point B. That is the furniture being revalued. Again, book value, how much? 20,000. Revalued amount?
15,000.
15,000. Revaluation decrease?
5,000.
5,000, it's a loss.
Yes, sir.
It's a pre-acquisition loss.
Yes, sir.
The next line, depreciation at 15% on 15,000. That should have been the right.
Yes.
2,000.
250.
250 should have been the right amount. But what has been already debited to P&L?
3,000.
3,000 debited. Nothing but 20,000 into 15%.
Yes, sir.
Or 20,000 minus 17,000, what you have?
Yes,
3,000. That means you are debited what?
More.
Therefore, you should add back.
Yes.
Therefore, write the last point. It is
Depreciation to be added back to post-acquisition profits, which is 3,000 minus 2,250, which is 750.
always remember any depreciation adjustment arising because the revaluation will be always against post acquisition
Acquisition.
because revaluation happens when? On acquisition.
Yes.
Got it?
Yes, sir.
So 750 will be added back to the profits
Yes,
post
sir.
acquisition. And that is all of the first 2 points, point A, point B. Now point C.
Yes, sir. Point C. Closing balance of reserve.
I'm taking a closing balance of reserve, right?
Yes,
Example,
sir.
general reserve.
Reserve.
And opening balance,
25,000.
remember always opening balance has to be pre. I'll tell you why. Because how the 25,000 reserve as on 14x0 will be what? Reserve already there as on 31. 3x0 last year
Yes, sir.
and brought forward to the current year.
Current year.
Definitely this can't be reserve of the current year, ruled out.
Yes, sir.
Remember, always the opening balance has to be pre-acquisition. So it is a 25,000 pre-acquisition reserve. Okay, you can label that.
Yes, sir.
And then on the other side, you're going to have 50,000, right?
Yes, sir.
And all the 50,000 will be what?
Post
It is amount transferred to reserve out in the,
current year.
that means we know all the 12 months in the current year is what?
Post.
Post-acquisition period. So it's all post-acquisition reserve.
Yes.
How much?
50,000
50,000 rupees. Please label that.
Yes, sir.
Pre and post reserves. Next.
Point D. Closing P&L balance.
Nothing but balance sheet P&L amount.
Yes, sir.
25.
25,000.
And what is the opening balance?
15,000.
It has to be.
Pre.
Why? Because it's a profit earned in the previous year brought forward.
Yes, sir.
Okay. If you want analogy, very simple. Let us say you open the wallet this morning, early morning, you find rupees at 10 in that. Is it income earned in the current year? No.
No.
It is earned in the previous, that is the previous day and brought forward to the
Current year.
current,
Yes, sir.
right?
Yes, sir.
Therefore, 10 rupee, what is in the wallet is a current, that is the opening balance is always a pre-acquisition.
Yes, sir.
And let's say 10 rupee becomes 60. That 50 is what? Earnings for the
Current.
today, the
Yes,
current
sir.
day, right?
Yes, sir.
Got it. So therefore, it is, one is brought forward from yesterday, that is what?
15,000.
That's what. In
Yes,
this
sir.
example, yesterday year, okay,
Yes,
from
sir.
the previous year, 15,000 opening, pre-acquisition P&L profit.
Yes, sir.
And then other side, 10,000 what?
Current year.
All the 10,000 current year will be post. Why? The reason is all the 12 months in the current year is post. Suppose I bought the shares in the middle of the year, then what I will do? The 10,000 is split into what? Two parts. based on time ratio.
Yes, sir.
6 months or whatever, right? But here all the 10,000 post acquisition. Remember against that you adjust two things.
Yes, sir.
From the subtract 5,000 depreciation.
Yes, sir.
And add back 750, right?
Yes, sir.
So 5,000
750
is a
post
post acquisition profit.
Yes, sir.
But remember all these numbers belong to whom? The holding company 80% and minority 20%.
20%.
All the numbers shown in point A, B, C, and D, all the profits or losses
Yes, sir.
belong to holding company 80%.
Yes,
Okay,
sir.
the lion's share. I get the lion's share and you get the minority share.
Yes,
Okay, a
sir.
small portion, 20% you get. And I get 80%, right?
Yes, sir.
Now, one more last note you should make always. What is it? Apportionment.
Yes, sir.
Point
E.
E.
It's a table. Particulars: pre-acquisition reserves and surplus, post-acquisition reserve, post-P&L,
You saw that
post-acquisition P&L.
when it comes to pre, doesn't matter. Reserve and surplus can put in one bucket.
Yes, sir.
When it comes to post-acquisition, what do? Put them in what? In reserve bucket and P&L bucket.
Yes, sir.
Okay. Now, first line.
Revaluation increase.
Increase only under pre, how much?
50,000.
50,000 rupees. Other columns nil.
Yes,
Next.
sir. Revaluation decrease. Furniture. In
Show
brackets,
rupees
5,000.
5,000 rupees in brackets. It's a loss. Next.
Reserve. Under pre 25,000.
Under pre 25,000. Under post reserve column, how much?
50,000.
50,000. 50,000. Next.
P&L. 15,000 under pre and 5,750 under post.
Under post acquisition P&L
P&L.
column. Then total.
Total 85,000, 50,000, 5,750.
But
Next.
remember, all these numbers belong to the holding company 80% and minority 20%. So
Yes,
that's
sir.
those are the next two lines.
Yes, sir.
Holding company 80%, how much?
68,000,
Then
40,000, 4,600.
And the next line,
Minority interest
take 20%, 17,000,
10,000,
10,000.
1,150.
That's it. Is that fine?
Yes, sir.
With that, you complete step number 2. In fact, the most important step in the exam will be what? Step number 2. If you go wrong with this, you go wrong with step number 3 and also step number 4. Gone.
Yes, sir.
You have to get your pre and post acquisition reserves and surplus. Is that fine?
Yes,
Correctly.
sir.
And with that, you complete step number 2. Okay.
Yes, sir.
Now again, guys, I'll go forward, but you pause the recording and complete. Okay. Step number 2 and then step number 3 you start with.
Yes, sir.
Step number 3.
Minority interest.
Exactly. We're going to calculate a minority interest. Always remember there are 3 possible numbers in minority interest. One is a share capital that you guys are holding,
Yes, sir.
plus all your pre and post acquisition profits.
Profits.
Pre-acquisition reserves and surplus, and post-acquisition reserves and profits.
Profits.
Maybe it'll be 2 line items,
Yes.
agreed. But basically, we are trying to find the minority interest as on balance sheet date. Okay. Share capital and then add profits.
Yes, sir.
Don't you think very similar to partnership, where you have the partner's capital and the partner's share of
Profits.
profits.
Yes.
Is a closing balance of partner's capital.
Yes, sir.
The only thing you are a minority partner.
Yes,
Okay.
sir.
Now let us go ahead and take on this.
Yes, sir. Step 3, minority interest. Paid up share capital, 200 shares of rupees 100 each.
You remember
20,000.
your company had 1,000 shares of 100 each.
Yes, sir.
Of that, I'm holding 800. You're holding 200 shares.
Yes, sir.
200 shares into rupees 100 each. How much?
20,000.
Or what are you going to do? What is your company's share capital?
1 lakh.
1 lakh rupees. On that, apply 20%.
20%.
Minority share.
Yes, sir.
20,000 rupees you get.
Yes, sir.
So 20,000 rupees. Then add a minority share of pre-acquisition reserves and surplus. How much?
17,000.
Then add a post-acquisition share of
Reserve.
reserves. How much?
10,000.
Only the minority share, okay?
Yes, sir.
And
10,000.
then post-acquisition profits. How much?
1,150.
You can either say P&L or surplus. Doesn't
Yes,
matter.
yes,
Okay. Total how much?
48,150.
And that is a minority interest to be shown in your balance
Balance
sheet.
sheet.
Okay. And then we are done with step number 3.
Yes, sir.
Now, step number 4, it is calculation of goodwill or capital reserve.
Yes, sir.
If you want to put that word cost of control also over there.
Yes, sir.
Okay, but just write, even if you write just goodwill capital reserve, that will suffice.
Yes, sir.
So you make a
Table.
table.
Yes, sir.
The first line word, you take the cost of
Investment.
my investment in your company.
Yes, sir.
I bought 800 shares at rupees 200 each.
1 lakh.
I take 1,60,000 as a cost of investment. COI, cost of investment, 1,60,000. Then from that, what? I should find what is the net assets I bought.
Yes, sir.
How do you find net assets normally? Assets minus liability.
Yes, sir.
But there's another way to define net asset. What is that? Share capital plus reserves
Reserves
and
and
surplus.
charges.
You know that there are two ways of defining net worth.
Yes, sir.
There are two ways you can define net assets. It's very simple. No, you learn the equation. Assets is equal to what? Liability plus capital. Assets minus liability equals what? Capital.
Capital.
Or you can take capital.
Yes, sir.
So in this case, what is a share capital of your company? 1 lakh.
Yes.
Of that, how much I control?
80%.
80%. 80,000 I will take.
Yes, sir.
Plus, I'll add another 68,000 reserves on acquisition date.
Yes, sir.
Remember, the minute I buy 80% of shares, what I also have 80% of your profits I enjoy.
Yes, sir.
When I buy shares in a company, I also get a share in your profits. Therefore, in all, 1,48,000. Very important. Just read that, Shruti.
Yes.
Share of net assets.
Share of net assets. A. Share capital. 1 lakh into 80%. 80,000. Pre-acquisition reserves and surplus. 68,000. Total 1,48,000.
People ask me, can I find 80,000 this way? I am holding how many shares in your company? 800
shares.
into face value 100 each.
80,000.
Yes, why not?
Yes, sir.
1,48,000 all. People are asking, what about the post-acquisition? You will not consider, because I said, remember in my discussion also, I calculate a goodwill on acquisition date.
Yes, sir.
So don't consider the profit made by the subsidiary company post-acquisition.
Yes, sir.
That will be like a return on my investment.
Investment.
That will add on to my profits later in step
Yes.
number 6. So in all, how much? 1,48,000 outer column. Now check this. I paid 1,60,000 rupees
Yes, sir.
for 1,48,000 worth of net assets. I paid something extra.
Yes, sir.
That is goodwill, 12,000 rupees.
Yes, sir.
Is that fine?
Yes, sir.
Again, guys, pause the video and then you go ahead and take down the notes, right?
Yes, sir.
Jot down step number 4 and then you proceed.
Yes, sir.
And in this example, step number 5 is what? Not applicable. Why? There are no intercompany owings, nothing.
Yes, sir.
And then we go to step number 6.
6.
That is nothing but you're trying to find the reserves and surplus to be shown in your balance sheet.
Yes, sir.
It's called consolidated reserves. In that, very simple. Particulars and then reserves
Surplus.
and surplus, nothing but a P&L balance.
Yes, sir.
Okay. So it's reserves and surplus, reserves and P&L.
Yes, sir.
So can we write P&L? Why not? Okay. The first line, what do you do? Take the holding company's reserves and surplus, a balance from the balance sheet.
Yes, sir.
Yes, so what is the first line?
Balance in H Limited.
In the holding company's balance sheet, how much?
2 lakh and 1 lakh.
For that, you can refer to note number 2, okay,
Yes,
in your question.
Yes.
2 lakh rupees and 1 lakh rupees. Then please add my return on investment.
Yes, sir.
My return on investment, okay, by investing in your company. So nothing but you can take my share of, go to step number 2, Shruti.
Yes, sir.
So the post-acquisition reserves,
Yes, sir.
my share is 40,000. And profits, it is around 4,000.
600.
Exactly. That is added, right?
Yes, sir.
Yes, ma'am. Add post-acquisition. Now come to step number
Yes,
6.
sir. Add H share post acquisition.
Reserves and surplus.
Yes. sir.
Under reserve column 40,000
40,000.
and under surplus,
4,600.
that's it. Make a total.
2,40,000. 1,04,600.
Is that fine?
Yes, sir.
And those are the numbers to be shown in your balance sheet as reserves and surplus. And one more thing, suppose you had a capital reserve in step number 4, even that will be shown as a part of reserves and surplus in step number 7 while preparing the balance sheet, right?
Yes, sir.
But in this case, we had a goodwill
Yes, sir.
and that will be shown in the balance sheet
Intangible.
On the asset side as intangible assets.
Yes.
Fine.
Yes, sir.
And we are done with all the 6 steps. Now you want some time to display the balance sheet? Now we'll go ahead and,
Sir.
okay, the balance sheet can be taken from your study mat.
Yes,
Okay.
sir.
We can take the balance sheet from the study mat. And what do? Read the balance sheet items first.
Yes, sir.
Okay. Or notes are made.
Yes, sir. Notes.
Okay. So let's read the balance sheet
Yes.
and then read the notes.
Yes.
And one more thing, remember these rules. When you prepare the CBS, remember, you will take only the holding company share capital in your balance sheet.
Yes, sir.
What about the subsidiary company? That has been already considered for computing minority
Right.
interest. Number 20,000
Yes,
has gone to minority interest. And
goodwill.
80,000 already set off against investment to find goodwill.
Yes, sir.
That's gone. And then don't consider the reserves and surplus of the subsidiary. Take that from step number 6.
Yes, sir.
And then you got to show the minority interest. Then
Yes.
remember, all other assets and liabilities can be what? Added.
Yes, sir.
The holding and subsidiary can be added. But be careful with property, plant, equipment. Why? Because some assets have been revalued.
Revalued.
You got to consider the revalued amount
Yes. Sir.
and minus the depreciation on the revalued amount.
Yes,
Is that
sir.
fine? Now let's go ahead and take on the balance sheet. But remember one thing, when you prepare the CBS, take only the holding company share capital.
Yes, sir.
And for reserves and surplus, refer to step number 6.
Yes, sir.
For minority interest, refer to step number 3.
3.
Okay. You don't once again show that in the note to the balance sheet. Fine.
Yes, sir.
And then all other assets and liabilities can be added up. But be careful with your property, plant, equipment, because assets have been revalued. Yes.
Consolidated balance sheet of H Limited and its subsidiary S Limited as of 31st March 20X1.
Mhm.
Particulars, note number, amount. Equity and liabilities. Number 1, shareholders funds. A, share capital. Note number 1, 6 lakh.
You saw 6 lakh, only the holding company share capital is
Yes,
shown.
sir.
Next.
B, reserves and
And
surplus.
one more rule I forgot. You'll never show my investment 1,60,000. Why? It has been taken for computing. Good.
Goodwill.
Okay.
Yes, sir.
Proceed now. 1 lakh rupees. 6 lakh. Next.
Yes. B, reserves and surplus. Note number 2, 3,44,600.
344, 600, nothing but you can refer to what?
Step 6.
What are the numbers you got? I think
2,40,000.
2,40,000 and
1,04,600.
exactly. That's your 344, 600. Next.
2, minority interest. Note 3, 48,150.
You say refer to step number
Three.
3. Next.
3, current liabilities. A, trade payables, 2,07,000.
Nothing but adding up both the trade payables, mine and yours, right?
Yes.
Holding and subsidiary. Next.
Assets. A, number 1, non-current assets. A, property, plant and equipment. Note number 4, 5,97,750.
Okay, next.
B, tangible assets. Note number 5, 12,000.
That is intangible assets.
Yes,
Not
sir.
tangible. Intangible assets, 12,000. That's goodwill.
Yes,
Next.
sir. C, other non-current investments. Note number 6, 5,90,000.
Out of 6 lakh rupees. Remember, out of
Yes,
6
sir.
lakh rupees, my investment in my investments, 1,60,000 what? Is investment shares in your company.
Yes, sir.
That has been taken for computing goodwill. Don't
Goodwill.
consider that. Balance
Yes.
how much?
4,40,000.
And also you have some investments in your balance sheet,
Yes, sir.
1,50,000.
Yes, sir.
Adding both 5,90,000.
Yes,
Next.
sir. Notes to accounts. Note number 1, share capital. 6,000 equity shares of rupees 100 each, fully paid up, 6 lakh.
You saw only my share capital, holding
Yes, sir.
companies. Next.
Number 2, reserves and surplus. Reserves, 2 lakh. Add 4/5. Share
No,
of X.
not required all that. You can straight away write what?
Step 6.
No, you write in note number 2, you write reserve how much? 2,40,000
2,40,000.
straight away. And then surplus,
1,04,600.
you can write it that way.
Yes, sir.
You will have to show 4/5 and all straight away.
Yes, sir.
3,44,000.
600.
Don't refer to this.
Yes, sir.
You write note number 2, but pick the numbers from step number 6.
6.
Next.
Number 3, minority interest. 48,150.
That's it. Already we have, right?
Yes.
We are done working for it. Step
Yes.
number 3. Next.
Number 4, property, plant and equipment. Machinery, H Limited, 3 lakh.
My machinery 3 lakh at the year end as it is.
Yes,
Then
sir. S Limited, 1 lakh. Add appreciation, 50,000.
In all, 1,50,000, right? 1
Yes,
lakh
sir.
plus increase 50,000, then minus
Depreciation.
how much?
15,000.
15,000. What is charged for the post-acquisition period, right?
Yes, sir.
So
Which is
3 lakh plus 1 lakh plus 50,000 increase minus 15,000. Net amount?
1,35,000.
Okay. In all, 4 lakh and 35.
Yes, sir. Four
Okay.
lakh and 35,000.
Next.
Furniture, H Limited, 1,50,000.
Same way. So what do you do then? Furniture for S Limited, how much?
20,000.
Minus 5,000
Yes, sir.
revaluation loss.
Which is
And then,
15,000.
okay, then add depreciation or rather less depreciation. How much?
2,250.
Exactly, 2,250. You can do it directly.
Yes, sir.
And what is the net amount?
12,750.
That's it. Add that to the furniture holding company total.
5,97,750.
Is that fine?
Yes, sir.
Got it?
Yes, sir.
Done.
No,
Remember what you should do. Be careful with your assets.
Yes, sir.
Take the amount given in the balance sheet, opening balance,
Yes, sir.
and then add appreciation. Or you can straight away take what? Real amount, 1
Yes,
lakh
sir.
and 50,000 minus 15,000.
Yes,
Right?
sir.
That's it. And don't take the 90,000 and 17,000 given for furniture in the question.
Yes,
Fine.
sir.
That's it.
Note number 5, intangible assets.
That is goodwill. Is 12,000. You can say refer to step number 4. Next.
Note number 6, other non-current investments. H Limited, 4,40,000. S Limited, 1,50,000. Total 5,90,000.
In all, 5 lakh and 90,000 non-current investments. That's it.
Yes, sir.
And no current assets at all.
No, sir.
Done.
Yes, sir.
With that, you complete the solution. Please go ahead and jot down the balance sheet as well. Okay.
Yes, sir.
Okay, so let us take on the next example, practice question number 3 from your study mat. In this example, you have been asked to calculate the minority interest on acquisition date, which is nothing but, you can take the share capital, that is shares held by the minority shareholders, right? The paid up share capital plus the reserves on acquisition date. Then once you add the post-acquisition profit or minus a post-acquisition loss, you'll get the minority interest at the end of the year. Is that fine?
Yes, sir.
Now let us go ahead and take on practice question 3. Yes.
Yes, sir. Practice question 3. From the following information, determine the minority interest on the date of acquisition and on the date of consolidation.
On 2 days.
Yes.
On acquisition date and also at the year end on
Yes.
consolidation date.
It's a table. Case, subsidiary company, percentage share owned, cost, date of acquisition. 1st Jan 20x1, share capital and profit and loss account. Consolidation date 31st December 20x1, share capital and profit and loss account. Case A, subsidiary company X, percentage share owned 90%.
90% of the shares are held by the holding company. That means balance 10% held by the minority shareholders. Next.
Cost 2 lakh.
So 2 lakh is the amount invested by the holding company. It will be taken only for computing goodwill. Next.
Date of acquisition, share capital 1,50,000.
Now date of acquisition is on 1st January. Okay.
Yes, sir.
For all the cases.
Yes, sir.
And share capital on that date, how much?
1,50,000.
Is 1,50,000 rupees. Next.
Profit and loss account 75,000.
Is 75,000 as on 1st January. Then
31st December, share capital 1,50,000.
same 1,50,000 continues. Next.
Profit and loss account 85,000.
That means what? 10,000 is a profit made in the year
Right.
by the subsidiary, right? Profit
sir.
earned is
Yes, sir.
10,000 for the year.
Case,
That's why 75,000 gone up to 85,000.
yes, sir.
Okay. Now, shall we look at a solution for this?
Yes, sir. Yes, sir.
The handwritten, right?
Yes, sir.
What is the first line?
Calculation of minority interest under the following cases.
Ah.
Particulars amount.
Okay. Case A.
Paid up share capital 1,50,000 into 10%.
Out of 1,50,000, 90% holding company, 10% minority, right?
Yes, sir.
So 1,50,000 into 10% is
15,000.
15,000 rupees. To that add
Pre-acquisition reserves and surplus 75,000 into 10%.
There's
which is
75,000 balance in PNL. On that 10% is 7,500.
500.
Add both, 22
500.
is the minority interest on acquisition date on 1st January.
Yes, sir.
And to this, add a post
Acquisition reserves and surplus.
profit will be 85,000 minus 75,000. 10,000 is a profit made by the subsidiary company in the current year post acquisition.
Yes, sir.
On that apply 10%
10%.
minority share 1,000
Yes, sir.
in all
23,500.
is a minority interest on 31st December, that is on the consolidation date. And don't consider the 2 lakh rupee amount invested by the holding company. They haven't asked for the goodwill.
Goodwill.
Right?
Yes,
Leave
sir.
it. Next.
Case
Go back to
B.
the question. Case B.
Subsidiary company Y. Percentage share of owned 75%.
75% holding means 25% minority interest. Next.
Cost 1,75,000.
1,75,000 is the amount I paid. 1,75,000 amount I paid for buying the 75% interest. Next.
Date of acquisition, the share capital 1,40,000. Profit and loss account 60,000.
1,40,000 share capital and balance in PL how much?
60,000.
Is 60,000 on 1st January on acquisition date. Next.
Consolidation date 31st December. Share capital 1,40,000.
Same 1,40,000. There will be no fresh issue made by the subsidiary company. And what is the balance in PNL?
20,000.
It has gone down by 40,000. That is supposed to be a post acquisition loss.
Yes, sir.
Is a loss sustained or loss made by the subsidiary company in the post acquisition period. 60,000 PNL has come down to 20,000, 40,000 loss for the year.
Yes, sir.
Yeah, go ahead with the solution.
Yes, sir.
Now just see minority interest for share capital. What are you going to do? 1,40,000 into 25%. How
Yes.
much?
35,000.
Then add pre-acquisition reserves and surplus will be 60,000 into 25%.
15,000.
Then adding both,
50,000.
and that is a minority interest on acquisition date.
Yes, sir.
And then add post or rather minus
Minus.
post acquisition loss.
Yes, sir.
It is 40,000 loss. 20,000.
Minus 60,000.
It is a negative 40,000 on that 25%.
10,000.
10,000 rupees loss is subtract. What is the net amount?
40,000.
And that is a minority interest as on 31st December year end.
Yes.
Is that fine?
Yes, sir.
Now go back to the
Yes, sir.
question.
Case C. Company Z. Share owned 70%. Cost 98,000. On the date of acquisition, the share capital is 40,000. Profit and loss account 20,000. On the date of consolidation, share capital 40,000. Profit and loss account 20,000.
That means no profit made in the current year.
Yes,
So
sir.
opening 20,000 and closing is 20,000, right?
Yes, sir.
So the profit for the year is nil. Now refer to the solution.
Yes,
And here 30% minority.
Yes, sir.
So what is 30% of
40,000.
how much? 12,000
12,000.
rupees. And then add pre-acquisition reserves and surplus 20,000 into 30%.
6,000.
6,000, adding both.
18,000.
And then add post-acquisition 0
Zero.
and total again 18,000.
18,000.
That means in this example, in this subdivision, the minority interest on acquisition date is same as what?
On
The
date of
minority interest on consolidation rate, right?
Yes, sir.
Next.
Case D. Company M. Share owned 95%. Cost
95%, okay, share owned. Next.
cost 75,000.
Uh-huh.
On the date of acquisition, share capital is 60,000. Profit and loss account is 35,000. And on consolidation date, the share capital is 60,000 and profit and loss account is 55,000.
So again, here there is a profit made in the current year. Now refer to the solution. Share capital will be 5%.
Yes, sir.
Minority, so 5% of
60,000.
60,000 rupees, 3,000. And then add pre-acquisition reserves and surplus, how much? 5% on?
35,000.
On 35,000, 1,000.
750.
Then adding both.
4,750.
That is a minority interest on acquisition date. And then to this add post-acquisition profits will be how much?
55,000 minus 35,000.
Which is 20,000 rupees on that 5%.
5%.
1,000 rupees added, you get 5,000
750.
as a minority interest on the consolidation date. Is that
Yes.
fine?
Yes, sir.
Is that all?
Yes, sir.
A very simple example. Just go ahead and jot down the solution. Okay.
Yes, sir.
Yes. Okay, so let us start with illustration number one
One.
from your study mat. Yes.
From the following data, determine in each case, number one, minority interest at the date of acquisition and at the date of consolidation. Number two, goodwill or capital reserve. Number three, amount of holding company's profit in the consolidated balance sheet, assuming holding company's own profit and loss account to be rupees 2 lakh in each case.
Okay. How many subdivisions are there?
3.
Okay, each subdivision you have been asked to answer three things. One is you have been asked to calculate the minority interest. I think on two dates, right?
Yes, sir.
On acquisition date and on consolidation date. And number two, you have been asked to find the goodwill or capital reserve.
Yes, sir.
And number three, what will be the profit
Yes, sir.
for the purpose of consolidation? Step number 6.
Yes, sir.
Where you consider the holding company's profits are 2 lakh rupees in each case and add a holding company share of post-acquisition profits.
Yes,
right?
sir.
So here we go with subdivision.
Case 1.
Case 1.
Yes, sir. Case 1. Subsidiary company A. Percentage shares owned 90%.
90% held by the holding company. Then
Cost 1,40,000.
I paid 1,40,000 for the 90% interest. Next.
Date of acquisition 1st January 20x1. Share capital
I bought shares on 1st Jan 20x1. Then share capital
1 lakh.
1 lakh rupees.
Profit and loss account 50,000.
50. All these are share capital P&L balance of the subsidiary company as on 1st January, right?
Yes, sir.
So 1 lakh rupees. Next.
Consolidation date 31st December 20x1.
X1.
Share capital rupees 1 lakh.
Same 1 lakh. Then
Profit and loss account 70,000.
is 70,000. What was the balance in P&L a year ago?
50,000.
At the start 50,000. Now it is
70,000.
I mean 20,000 is a profit for the current year.
Yes,
right?
Sir.
Now let's go through the solution for case 1.
Yes, sir.
Yes.
Yes, sir.
Yes, ma.
Minority interest.
So what do you do? Share capital, how much?
10,000.
It is 10% of 1 lakh
1 lakh.
rupees. How much? 10,000.
10,000.
Then add pre-acquisition reserves. 50,000 rupees into 10%, how much?
5,000.
5,000 rupees. And then in all, 15,000 is a
15,000.
minority interest on acquisition date. Then add post-acquisition profits will be 70,000 minus
50,000.
which is 20,000 rupees. On that 10% is 2,000 added.
Yes,
Total
sir.
how much?
17,000.
And that is a minority interest on 31st December X1.
Yes,
Next.
sir.
Then goodwill computation. Have you shown that?
Yes, sir.
Okay, goodwill.
Yes, sir.
What is that cost of?
Control.
That's a cost of investment. How much?
Yes, sir. 1,40,000.
1,40,000. Then
Less share of net assets.
under that, number
Share
1
capital.
will be 90% of 1 lakh. How much? 90,000
90,000.
rupees. Also add,
Pre-acquisition reserves and surplus.
which will be 50,000 into 90%. How much?
45,000.
That's a don't consider the post-acquisition profit because goodwill is a number that is calculated on acquisition date. In all, it's going to be 1 lakh and it is a 90,000 plus 45,000 adds up to 1,35,000,
Yes, sir.
right?
Yes, sir.
And then what is the amount I paid? 1,40,000. Therefore, 5,000 rupees.
Goodwill.
I paid something more. So
Yes,
5,000 goodwill, right? Then one more computation.
Amount
Yes.
of holding company's profit in the consolidated balance sheet.
Will be 2 lakh rupees. Have you taken that? The holding company amount.
Yes, sir.
And then add the holding company share of post-acquisition
Post-acquisition
profits. How much?
Which is 18,000.
18,000 rupees. In all,
2,18,000.
have you shown that?
No, sir.
No, you're showing 18,000.
Yes, sir.
So it should be 2 lakh and 18,000.
Yes, sir.
I think they given the holding company's profit is 2 lakh rupees, right?
Yes, sir. In each
So 2 lakh plus 18,000.
18,000.
Put it that way.
Yes, sir.
So in all, 2 lakh 18,000 is a amount to be shown in the balance sheet. Is
Yes,
that
sir.
fine?
Yes, sir.
2 lakh and 18,000. Okay.
Yes, sir.
So you can just pause the recording and jot it down.
Yes,
Case
sir.
1. Okay, so guys, even in your textbook, they given how much? I think 18,000. But a better answer will be 2 lakh 18,000 because 2 lakh is a holding company's profit and loss balance.
Yes, sir.
And add holding company share of post-acquisition profits, which is 18,000.
Yes, sir.
In all, 2,18,000 will be the balance and profit and loss shown in the CBS.
Yes,
Is that
sir.
fine?
Yes, sir.
And that is the answer to the first subdivision.
Yes, sir.
That is case 1.
Yes, sir.
Now let's go back and read case 2.
Case 2. Subsidiary company B. Percentage shares owned 85%.
85%. Okay.
Cost 1,04,000.
Mm-hmm.
Date of acquisition, share capital 1 lakh, profit and loss account 30,000. Consolidation date, share capital rupees 1 lakh,
1 lakh.
profit and loss account rupees 20,000.
30 has become
20.
20. That means 10,000 loss,
Loss.
right?
Yes,
Okay.
sir.
Now, shall we?
Yes, sir.
So let's go to the solution. Just see, minority interest part, very simple. I'll take 15% of rupees 1 lakh.
1 lakh.
How much? 15,000.
15,000.
And then add a minority share of pre-acquisition reserves and surplus.
Yes, sir.
It is 30,000
30,000
rupees into 15%, 4,000.
500.
Then adding both.
19,500.
And then add post-acquisition, rather subtract.
Yes.
Post-acquisition loss.
Yes, sir.
It is a 10,000 loss.
Into 15.
On that 15% is 1,500. Subtract. What is the net amount?
18,000.
That's it. And that is a minority interest for the purpose of consolidation, right?
Yes, sir.
And then next, goodwill computation. Goodwill or capital reserve.
Yes, sir.
Now, what is the cost of investment? 1 lakh and 4,000.
Yes, sir.
And then share of net
Net
assets.
assets.
Share capital will be 1 lakh rupees into 85%. 85,000. And then to that, add pre-acquisition reserves, 85% of 30,000.
Yes.
How much?
25,500.
Adding both,
1,10,500.
it is something more than the amount I invested, right?
Yes, sir.
So it's I paid something less.
Less.
I paid only 1 lakh and 4,000 rupees, and I bought a net assets worth rupees 1 lakh.
10,500.
Exactly. So I made a profit
Yes, sir.
as an investor, and that profit is transferred to capital reserve.
Reserve.
How much?
6,500.
That's it. Is that fine?
Yes,
Please
sir.
remember, whenever the cost of investment is less than the share of net assets, it's a gain or profit made by the holding company by investing in the subsidiary company. And such profits are capital profits and transferred to capital reserve. Is that fine?
Yes, sir.
Next.
Subdivision 3. 85%.
85%.
PNL as on 1st January X1, which is 30,000.
Okay.
And PNL as on consolidation date 20,000.
And one more thing we forgot. What will be the in case 2?
Yes, sir.
What is the balance in PNL, right? On 10,000 rupees loss.
Yes, sir.
On 10,000 loss, what is 85%? 8,500
500.
loss.
Yes, sir.
But the amount to be shown in balance sheet will be 2 lakh PNL balance for holding company minus
8,000.
8,500. Is that fine?
Yes, sir.
And that answer will be more appropriate.
Yes, sir.
So 2 lakh minus 8,500. How much you get? 1,91,500.
500.
But in your study mat also, I think they given just 8,500
Yes, sir.
loss. Okay, next. We'll go to case 3.
Yes, sir.
Hmm.
Case 3. Company C.
Company C,
80%.
80%,
Cost 56,000.
56,000. Okay.
On the date of acquisition, the share capital 50,000.
Mhm.
Profit and loss account 20,000.
Mhm.
On the date of consolidation, the share capital is 50,000 and profit and loss account is 20,000.
Okay. What is the balance in PNL on 1st January
20,000.
and closing?
20,000.
Or no change?
No.
Now just see, 80% holding, right? I mean 20% minority
Minority.
interest. Just see, share capital, how much?
10,000, which is
It is 20% of,
50,000.
very good. And pre-acquisition reserves, how much?
20,000 into 20%.
20%, 4,000.
Total 14,000.
And then add a post, nothing, zero.
Zero.
So same 14,000.
14,000.
And then comes,
Goodwill or capital reserve.
very simple, what is the cost of investment?
56,000.
And share of net assets under the share capital
50,000
into 80%. So
40,000.
40,000. Then
pre-acquisition reserves and surplus, which is 20,000 into 80%, which is 16,000.
that's
And the
right,
goodwill or the capital reserve is nil. Because
is zero.
yes,
Because it's exactly 56,000.
6,000.
Therefore, there is no goodwill or capital reserve, right?
Yes, sir.
And that's it. Is that fine?
Yes, sir.
Any other case, situation? No.
Yes, sir.
One
Fourth
more case. Okay,
Yes,
case
sir.
4.
Case 4, Company D, holding 100%,
Okay.
1 lakh. On the date of
100% holding.
yes,
That means there is no minority interest at all.
yes, sir. And the date of acquisition, the share capital 50,000 and profit and loss account 40,000. On the date of consolidation, share capital 50,000, profit and loss account 55,000.
15,000 post
Yes,
acquisition profit. Okay. So you're working.
yes, sir.
Yes, ma'am.
Minority interest is nil.
Nil. Next.
Goodwill or capital reserve. Cost of investment 1 lakh.
1 lakh.
Less. Share of net assets.
Under that?
Share capital 50,000, which is
100% of 50,000, 50,000. Then pre-acquisition.
40,000, 100%, 40,000.
So in all 90,000 outer column, there's a 10,000 rupees.
Goodwill.
Goodwill. Next. And your post-acquisition profit will be how much? 15,000. On that 100%,
15,000.
this can be added to 2 lakh, right?
Yes, sir.
Your study one, there's only 15,000, but the right amount should be 2 lakh. What is there in the holding company plus 15,000 rupees? In all, 2 lakh, 15,000.
Yes, sir.
That's it.
Yes, sir.
So that is all, guys. With that, we complete this example. Please go ahead and jot down the solution.
Yes, sir.
Okay, so let's start with practice question number 2 from your study mat. Yes.
King Limited acquires 70% of the equity shares of Queen Limited as on 31st March 20X1
Okay.
at a cost of rupees 140 lakhs.
So 140 lakh is the cost of investment that will be taken for computing goodwill or capital reserve.
Reserve.
Next.
And the following information is available from the balance sheet of Queen Limited as on 31st March 20X1.
As on 31/3/X1. Okay.
Rupees in lakhs. Property, plant and equipment 240. Investments 110.
Okay.
Current assets 140.
Okay.
Loans and advances 30. 15% debentures 180. Current liabilities 100.
So they given assets and liabilities of the company as on 31st March X1. Next.
The following revaluations have been agreed upon, not included in the above figures. Property, plant and equipment up by 20%.
So what is the amount given in the question?
240.
So add another
40.
40% is it?
Yes. 20%.
20%. So 48.
Yes, sir.
In all 288 lakh.
Yes, sir.
Next.
And investments down by 10%.
So what is investment?
110.
So 10% down 11 lakh. So 99.
Yes,
Next.
sir. King Limited purchased the shares of Queen Limited at rupees 20 per share.
At rupees 20 per share.
Face value rupees 10.
So if you divide 140 lakh by rupees 20, you will get the number of shares bought.
Yes, sir.
If you divide 140 lakh by 20, 7 lakh shares.
Yes, sir.
Face value rupees 10 each, but you bought 70% of the share capital of the subsidiary company at rupees, that is what? 120 rupees per share, right?
Yes,
that is 140 lakh you paid. Next.
Calculate the amount of goodwill / capital reserve on acquisition of shares of Queen Limited.
Okay, if you're wondering where are the reserves and where is the share capital, not required at all, because you've been given what? The net assets.
Yes, sir.
Now, what you can calculate the net assets on acquisition date, which will be equal to what? Your share capital plus pre-acquisition reserves and surplus, including what? Any revaluation profit or revaluation loss.
Yes, sir.
So therefore, what you can do, you can follow this approach. Which one? The asset side.
Yes.
Now calculate the net assets. Yes, ma'am. The solution.
Yes. Yes, sir.
Yeah.
Revalued net assets of Queen Limited as on 31st March 20X1.
Yes.
Amount, particulars, amount, rupees in lakhs. PPE, 240 into 120%.
120% or 240 lakh plus 20% or 240. In all 288 lakh. Next.
Investments, 110 into 90%.
Into 90 by 100, 10% down, so 99 lakh. Next.
Current assets, 140.
No change, 140 lakh as it is. Then
loans and
140, right?
Yes, 140.
Then
loans and advances, 30.
Another asset, 30 lakh. Then
Total assets after revaluation 557.
And then minus
Less 15% debenture
all the outside liabilities. Debenture liability, how much?
180.
180 lakh.
Current liabilities 100.
Then
Equity slash net worth 277.
you can either say it's a net assets or nothing but your equity,
Yes, sir.
right? Nothing about your capital plus pre-acquisition reserves,
Reserves.
including revaluation, increase or decrease.
Yes, sir.
How much?
277.
277. This will include share capital plus what? Pre-acquisition reserves of the subsidiary company.
Yes,
Is that
sir.
fine? Next.
King Limited's share of net assets 70% of
70% of 277. Remember, we do that normally.
yes, sir.
We'll normally take 70% of share capital and 70% of pre-acquisition reserves. But here you can take 70% of 277.
Yes.
How much?
193.9.
193.9 lakh.
King Limited's cost of acquisition of shares of Queen Limited, which is 140 lakhs.
So 140 lakh I paid a cost of investment less the share of net assets.
Yes.
Will be 193.9.
9.
So what is
Capital
the capital reserve?
53.9.
You know, I paid something less.
Less.
I paid 140 lakh and bought a net assets worth of 193.9 lakh. I paid a 53.9 lakh less. That's a gain.
Yeah.
And transferred to capital reserve. So 53.9 lakh. Now, please remember your net assets represent nothing but what? Share capital plus reserves and surplus. Understood?
Yes, sir.
In this example, you can follow this approach. Fine.
Yes, sir.
Because we have the assets and liabilities on acquisition date.
Yes, sir.
So I use asset side approach. So that's it. Please go ahead and jot down the solution.
Yes, sir.
Okay, so guys, we are done with the session. Okay.
Yes, sir.
So we'll meet tomorrow. I think we're done almost, I think 4 sums are done.
Yes, sir.
One big sum, including revaluation of assets.
Yes, sir.
And the next 3 sums are, on minority interest and the computation of goodwill capital reserve, right?
Yes, sir.
So we'll end the day. Bye-bye.
Thank you, sir.
Thank you.